Brent crude prices below $110 a barrel. We've also got the WTI price coming under pressure. US inventories seem to be the biggest focus right now. This is despite the fact that Libya production has still not come on board. Tell us about the volatility at this point, and are we perhaps headed to a fairer Brent crude price?
I think the volatility that you're seeing in the moment is due to a change in some of the fundamental factors that led to a rise in the oil price earlier. So even though production in Libya is not fully on stream, I don't think it's as bad as people expected, combined with the increased US inventories. Also, I think the markets were expecting a disruption to refineries in the US South, which didn't materialize. Obviously,
water levels are at this point rising, though, so they are keeping that.
Correct, but I think opening of the spillway seems to have made people quite positive that the 10 biggest refineries will be saved. So I think based on that, you're going to see a bit of a correction in the oil price. Obviously, from a fundamental supply point of view, the Middle East still remains volatile. Anything could happen there that could change the course of the price movement as well.
With regards to where oil could be headed going forward, I mean, we saw some interesting numbers out of the Eurozone with regards to GDP growth. We know that France and Germany steaming ahead, those peripheral areas still coming under pressure. Could that be a dampener with regards to the consumption of oil? And then you've got China steaming ahead. You've got demand destruction in some sense occurring in the US with gasoline prices up quite extensively.
I think the Eurozone debt crisis basically could trigger what you could call a crisis of confidence, where people would be wondering, what sort of economic growth can we get going forward? Will interest rates rise more to cool growing inflation? So there's a bit of uncertainty on exactly where economic growth is going. There are some strong performances, as you mentioned, but obviously the crisis in the Eurozone, particularly Portugal, Greece, could pull all of that down, especially depending on how the markets take that and what their view of the resulting activity is.
With regards to what we're seeing on the gold front, we saw gold rallying quite extensively this morning. I mean, it was reached a session high of around $1,497 an ounce, and now we're seeing it dipping quite extensively around $1,470 an ounce or so. A lot of volatility. I mean, $50, $60, $100 moves seems to be the name of the game when it comes to this gold price. Where to from here? I mean, ETFs also quite interesting to watch, and then you've got the silver price plummeting as well, sitting at around $33 an ounce. So the investment space seems to be one of those interesting factors.
I think there's been a bit of profit taking in the investment space. We know George Soros has sold off most of his gold holdings. In terms of the fundamentals that have driven gold upwards over the past few months, those seem to be in place: accelerating inflation, continued uncertainty over the Eurozone debt. So those factors are still there, uncertainty politically as well in many parts of the world. So structurally, gold seems to be set to continue rallying, but obviously there'll be profit taking in the investment space, which could affect prices.
So what level would you say one should head in if you haven't bought gold yet? In dollar terms, of course, in rand terms, it's perhaps a little bit less expensive. But if you haven't bought, where would you be buying at this point?
That's really difficult to say. I don't think you can call it on the price. I think you've got to look at the underlying fundamentals. And if you're happy that the underlying drivers are still in place, then you should get in and rather ride the fundamental story. I think trying to call it on the price would be a bit disingenuous at this stage.
With regards to platinum, palladium, Johnson Matthey out with its survey as well. We know that the surplus that we've seen in the platinum market, particularly from 2010 levels to what we're seeing right now, perhaps slightly softer at this point. Palladium, also one of those interesting metals, Russian supply stocks, a very big issue going forward. How do you see that playing out? And of course, the investment versus the demand fundamentals.
I think if you look at the drivers for platinum in the previous year, it was primarily automotive demand, which we know the tsunami in Japan has now curtailed to an extent. It was industrial demand from chemical space. Again, looking at the Eurozone debt crisis, the confidence depends how the economic growth turns out. So if we see a bit of a recovery and if Japan automotive supplies can get flowing to Europe and the US again, then I think you could see platinum trending upwards. And obviously there'll be profit taking in the investment space as well, to the extent that platinum has tracked gold upwards.
Do platinum, gold, palladium and oil prices at these levels create a bit of concern for you? Would you say that we're currently in bubble territory where we need to see an even sharper correction than some of the drops that we've seen recently?
Look, we've definitely had high price rises, and corrections are a normal part of markets. Whether it's a bubble territory remains to be seen. Oil's nowhere as high as we knew it went previously, and gold obviously is at all-time highs, but the fundamentals are strong driving it. So I'd say let's wait and see. Let's see how things pan out. Some interesting economic stories as well.